Right now, Shopify stock, ticker symbol SHOP, is up 55% since February of 2023. It trades at $82.76 per share, close to its 52-week highs. With its recent strong performance, is Shopify stock a smart buy right now? We'll answer this big question with a deep dive analysis of Shopify, reviewing important financial metrics favored by Warren Buffett and comparing the stock's performance against competitors. Plus, I will share a special bonus that could be the deciding factor when adding Shopify stock to your portfolio. At the end of the video, we will run the numbers through 3 valuation models to figure out what Shopify's fair value price is in today's market. And there's more. I will also give you my rating and what I've been doing with Shopify in the portfolio. So is Shopify a great chance to make money? Let's find out together. Before our analysis, I want to welcome you to Global Value and share a friendly disclaimer. Please remember that this is not financial or investment advice and that you should do your own due diligence and make decisions based on your own circumstances. Now, let's get right into it. In the last year, Shopify's beat the market. Their stock price has more than doubled the S&P 500, which is up just 21%. Even with this market-beating performance, Shopify still trails e-commerce giant and rival Amazon, which is up 66% since February of 2023. Since Shopify was listed, however, just under 9 years ago, it's one of the top-performing stocks in the market. Even after coming down from its all-time highs, which it hit at the end of 2022, Shopify has still compounded at 45.5% annually. They've crushed it over this time, literally one of the best in the market. As mentioned, Shopify trades $9 below their 52-week high, and this is up more than double from their 52-week low. Still, there's not much short interest with just about 2% of their shares sold short, and Shopify is a huge company with a $99.9 billion enterprise value. As of today, just 3 super investors hold positions in Shopify. This is led by Josh Tarasoff with a 6.3% position. Now, what does Shopify actually do? Shopify offers an e-commerce platform primarily to small and medium-sized businesses. The firm has 2 segments. The subscription solutions segment allows Shopify merchants to conduct e-commerce on a variety of platforms. These include the company's website, physical stores, pop-ups, kiosks, social networks like Facebook and Amazon. The Merchant Solutions segment offers add-on products for the platform that facilitate e-commerce and include Shopify Payments, Shopify Shipping, and Shopify Capital. The company was incorporated in 2004, formerly known as Jaded Pixel Technologies, and it's headquartered in Ottawa, Canada. Now, with that understanding, let's dive deep into the numbers that Warren Buffett cares about. This step-by-step checklist-style approach reverse engineers how Warren Buffett would look at a company's numbers. It gives you one of the best shots of finding undervalued, high-quality stocks that can beat the market and make you a lot of money in the process. Getting started with metric number 1, we want their average returns on capital to be above 14%. This helps us measure how much money the company is making for everything invested into it. Given where Shopify is in its business lifecycle, this can be slightly off and misleading for the business as it's based on their earnings before interest and tax compared to the total capital of the business. In a younger, more growth-focused mode, this may unfairly penalize the company. In fact, when we average this out, Shopify has negative returns on capital. A lot of that's driven by reinvestment back into the business and how accounting may mistreat a high-growth company like this compared to some other steady, reliable industrials. Still, it's an X on metric number 1, just something to keep in mind. Next, in a company with a reputation for growth, we want to see it. So we want their sales, earnings, and free cash flows to have grown in the last 5 years. When we look at Shopify, this is the case. Their sales are up more than 4 times. Their net incomes, which were negative in 2019, are positive today. Worth noting, they're negative here in 2022 as the company took a $2.9 billion loss in an investment. Likely the most important is the company's free cash flows have grown as well. Shopify generated $905 million of free cash flow in fiscal 2023. That's their most in any year in their history. It's great to see this growth, especially in their free cash flows, as it's our first check of the day on metric number 2. We're looking at Shopify from the view of an individual shareholder in metric number 3. Here we want earnings per share growth. This can help us figure out if they're actually increasing value for individual shareholders. This builds off our prior metric where we saw their earnings are now positive. Even though these were negative in 2 of these years, Shopify brought in 10 cents worth of earnings for each share they had outstanding. This comes even as the company has diluted shareholders by 15% in the last 5 years alone. This is mostly a product of share-based compensation, but it's something to really watch out for in these growing tech companies. Shopify's not the worst offender, but 15% can make up a pretty sizable difference, especially if things would go south for the business. Still, with positive earnings per share, it's a check on metric number 3. Our 4th metric looks at something similar but even more important. We want free cash flow per share growth. Ultimately, it's how most productive assets, including Shopify, are valued. That's why it's great to see that their free cash flows are at an all-time high in their fiscal 23. Shopify brought in 71 cents worth of free cash flow for each share they had outstanding in this time. It's yet another check on metric number 4. So far, through 4 metrics, we have 3 checks and only 1 X for Shopify. How will the business keep performing, and what are they possibly worth? We'll start to figure that out right after we look at their debt. Wonderful businesses can earn high returns on capital, grow, and not use a lot of debt in the process. Shopify's not at those high returns quite yet, but the company's grown a lot and they don't use much debt. They've had negative net debt in all 5 of the last years. This means after paying off their debts, Shopify is left over with cash on their balance sheet. This is a solid cash cushion, and it's what we want to see in metric number 5. Here we want their net debt to be below the sum of their free cash flows. Not only is Shopify currently sitting on a $3.9 billion cash cushion, they brought in $1.8 billion of free cash flow in their last 5 years, half of that coming in their most recent fiscal year alone. It's great to see here Shopify generates cash and they have this cash to back them up. It's another check on metric number 5. That's 4 in a row. Now, how much is Shopify potentially worth? The big metric of them all, metric number 6, we're looking at our first valuation model to figure out Shopify's fair value. Right now, their total enterprise value is right around $100 billion. This is what we get when we add their market cap and their net debt together, which allows us to look at the company more like it's a private business. When we divide their average free cash flows by this, we want it to be above the yield from the 10-year treasury. That's roughly one of the ways Warren Buffett is looking at his investments. Shopify, as a company with a lot of growth in their last 5 years, is going to have a pretty tiny average free cash flow yield. They only bring in $350 million in free cash flow in a given year over this time. Today, even with $905 million of cash flow in 2023, the company only has a 1% current free cash flow yield. These both are well below the 5% benchmark we were looking for. This means on metric number 6, it's an X. Don't just throw the business out, we still have 2 more valuation models to figure out what Shopify's really worth. And these models have some key differences that you're going to want to stick around for. Our second value model brings us to a DCF valuation. This takes Shopify's free cash flows and uses growth assumptions based on their historical numbers to project these into the future. Then we add in their tangible book value to estimate their net worth. These are assumptions that it's up to you to do your own homework on and figure out if they're accurate or not. If we take Shopify's free cash flows and assume they grow at a huge rate of 31% in each of the next 10 years, then in the following decade, assuming these grow at just half of that rate but still very high at 15.5%, if we add in their tangible book value and we want a market-beating 15% rate of return, which is what Warren Buffett looks for from his investments, an estimate of Shopify's fair value is around $47 per share at today's valuations. That's down from today's stock price. Please keep some key points in mind. Shopify has not been very predictable in their past due to their very high growth, which does not always come in a smooth line up and to the right. Relative to other businesses, Shopify trades at some pretty high multiples. Right now, they have a price to sales ratio of roughly 15 times. That still puts a huge expectation for very high growth on the business. Practically, it's very likely Shopify will see its valuation multiples fall in the next 10 to 20 years. This is a headwind that the business performance is ultimately going to have to overcome to get a market-beating rate of return. We'll modify their GF value as our final valuation. Today, this comes in at $77 per share. If you're interested in learning more about our valuation models, check out the free resource on our Patreon for a full description. Based on a number of different ways of valuing Shopify, it looks like the company is pretty far out ahead of most of these common value standards. Now, so far, we've looked at most of the numbers Warren Buffett cares about, but it's the qualities of a business that are even more important to him. Why don't we learn what these are for Shopify so we can combine them with our valuations to give their final fair value and rating at the end of the video. Let's start with the long thesis first. Number 1, Shopify's growth has been strong and it's expected to remain so, with robust new merchant adds, increasing GVM, and high attach rates. Number 2, Shopify is attractive for small-medium businesses because it's simple to use and has a wide variety of built-in features that make it a turnkey solution. Number 3, the company has many experts to help small-medium businesses with website design, photography, and other elements of the process, and it benefits from a large referral and development ecosystem. But it's not all positives for the business. Let's look at a short thesis as well. Number 1, Shopify has traded at lofty valuations at times. And while it might continue to generate strong growth, the company may still fail to live up to optimistic expectations embedded in its share price. Number 2, Shopify is overexposed to the economic cycle, with the high failure rate for core small-medium business customers exacerbated by the fact that retail volume would likely decline in a downturn. Additionally, management's strategy is to avoid going direct to consumers. Number 3, the build-out of Shopify fulfillment network will require substantial investment in both financial terms and management resources. It's something e-commerce rival Amazon was able to achieve only by having fantastic leadership in that division. Now let's put it all together for Shopify. This far in our fundamental analysis of Shopify, stock ticker SHOP, we learned they go 4 for 6 on the Select 6 analysis. The company's grown like gangbusters, they have a huge cash cushion, and they're starting to generate a lot of free cash flow, especially compared to their past. Still, there's a lot of expectations in their share price. Shopify trades at a very low free cash flow yield, and they still have negative returns on capital, plus they're investing heavily into their ecosystem. The company has some strong advantages, being the go-to turnkey solution for small, medium-sized businesses interested in e-commerce. Still, when we combine their business qualities and their valuations, today it looks like a fair value estimate for Shopify is around $48 per share. That's down $38 from today's stock price. While Shopify may be a popular high-growth business, right now it's not going into the portfolio. Today it looks like it's overvalued. Still, use common sense and do what's right for you. You can follow a real-time valuation for Shopify by clicking on their stock tracker linked in the description below. Thanks for watching, and check out this next video too.